When investing in a high inflation economy, it's important to consider investments that can help you hedge against inflation. Here are a few options to consider. Commodities. Commodities such as gold, silver, oil, and agricultural products tend to do well during times of inflation as their prices tend to rise in response to a weakening currency. Real estate. Real estate is another asset class that can help you hedge against inflation. As the cost of living goes up, so does the price of homes and rental properties, providing a steady stream of income and capital appreciation. Dividend-paying stocks. Stocks that pay dividends can provide a steady stream of income that can keep pace with inflation, making them a good option for investors who are looking for income and growth. Inflation-protected securities. Inflation-protected securities such as Treasury inflation-protected securities, TIPS, are designed to keep pace with inflation. They pay interest based on the inflation rate, which means their payouts increase with inflation. Consumer staples. Consumer staples companies tend to perform well during times of inflation as they produce goods and services that are necessary for everyday life, such as food, toiletries, and household products. However, it's important to note that investing in the stock market carries risks, and it's always advisable to consult with a financial advisor before making any investment decisions. Here are a few examples of stocks that may be worth considering during inflationary times. Energy stocks. Energy companies, such as oil and gas producers, tend to benefit from inflation as their profits can rise in response to rising oil and gas prices. Examples of energy stocks include Chevron, CVX, ExxonMobil, XOM, and ConocoPhillips, COP. Consumer staples stocks. Consumer staples companies, such as those that produce household products, food, and beverages, are generally able to pass on increased costs to consumers, which can help protect their profits during inflationary periods. Examples of consumer staples stocks include Procter & Gamble, PG, PepsiCo, PEP, and Colgate-Palmolive, CL. Utilities stocks. Utilities companies, such as those that produce electricity, gas, and water, may be able to pass on increased costs to consumers, which can help protect their profits during inflationary periods. Examples of utilities stocks include NextEra Energy, NE, Dominion Energy, D, and American Electric Power, AEP. Real estate stocks. Real estate investment trusts or REITs may be worth considering during inflationary times as they can benefit from rising property prices and rents. Examples of REITs include Prologis, PLD, Equity Residential, EQR, and Public Storage, PSA. Materials stocks. Materials companies, such as those that produce construction materials, metals, and chemicals, may benefit from rising prices during inflationary periods. Examples of materials stocks include Dow Incorporated, Dow, Sherwin-Williams, SHW, and Freeport-McMoRan, FCX. Again, it's important to keep in mind that investing in stocks carries risks, and it's always advisable to consult with a financial advisor before making any investment decisions. A good investment strategy in high inflation times typically involves a mix of investments that can help you hedge against inflation, while still providing some growth potential. Here are some key steps to consider when developing a good investment strategy in high inflation times. Diversify your portfolio. Diversification is key in any investment strategy, and particularly important in times of high inflation. By diversifying your portfolio across different asset classes, such as stocks, bonds, and commodities, you can help reduce your overall risk and increase your chances of success. For example, you might consider allocating a portion of your portfolio to inflation-protected securities, such as Treasury inflation-protected securities, TIPS, and another portion to dividend-paying stocks. Focus on quality. In times of high inflation, it's important to focus on high-quality investments that can help protect your capital. Look for companies with strong balance sheets, good cash flow, and stable earnings. For example, you might consider investing in blue-chip stocks such as Microsoft, MSFT, Johnson & Johnson, J&J, or Visa V, which have demonstrated a track record of stability and growth. Consider alternative investments. Inflation can impact different types of investments differently, so it may be worth considering alternative investments that can help you hedge against inflation. For example, you might consider investing in commodities such as gold or silver, which have historically done well during times of inflation. Real estate and real estate investment trusts or REITs can also be a good option, as they can provide a steady stream of income and capital appreciation. Stay informed. Inflation rates can be volatile, so it's important to stay informed about economic indicators and market trends. Pay attention to interest rates, government policy, and inflation expectations, and adjust your investment strategy accordingly. Consult a financial advisor. Investing can be complex, particularly in times of high inflation. Consider consulting a financial advisor who can help you develop an investment strategy that is tailored to your needs and risk tolerance. Ultimately, the key to a good investment strategy in high inflation times is to remain flexible and stay focused on your long-term goals. By diversifying your portfolio, focusing on quality investments, considering alternative investments, staying informed, and seeking professional advice, you can help protect your capital and achieve long-term growth. Remember to smash that like button and subscribe to the channel. Thank you.